Welcome, everyone, to the Kendall Report. Sorry for the late start. I warned you yesterday it might be the case. And someone's asking if I'm in my bed slippers and a pipe. No, it's only 3:30 in the afternoon here, so not the case. I had to go out of town. And, hey, Bo, if I would have thought about it, I would have had breakfast with you this morning. Next time I come down, I'll give you a call. So sorry about that. I thought about it once I was already down there, and I was up north. So anyway, folks, welcome. Only thing I saw this morning, I was in the office till about the first hour of trading this morning, long enough to see the market trading down in the 44.90 handle, put a small long position on that I still own just for fun, because I am under the continuing to be under the expectation as we get closer to Wednesday that the Fed's going to raise rates. I was on a Twitter space this morning, and just briefly, I think it was about 5:30 a.m. my time, something like that. And I was discussing this because I've been telling you folks for a while that I really believe that Powell told us exactly what they weren't going to do, which was in every other meeting raise. They don't. And meanwhile, all the expectations, the Fed funds futures are suggesting we're 0.0% chance of a raise. So you know that's going to happen, right? Those guys aren't very good at predicting that. Most of the time, they're wrong. I don't know why anyone looks at those things. I guess it's fun to trade, maybe. I don't know. I've never traded those. But what we're seeing here is actually is a really lopsided expectation where everybody's on one side again. And so only a surprise can happen. But even then, as I told you yesterday, I do not see any surprise. I think it's 50-50 baked in. They do, they don't. It's just kind of one of these ego things talking about stuff. But I think Powell told us that we're not doing every other meeting. I don't want people to expect that. So it's almost like if they don't do one on Wednesday, if they don't raise 25%, they're going to be every other meeting. Okay, so I think I seem to be one of the few people that actually listen to what the Fed's told us. They have told us going back a year ago, before all these raises, that they were going to keep raising and they were going to fight inflation. You're going to hear more of that on Wednesday. So there's really not much of anything coming out. I was trying to get ready for the show here tonight, and for the most part, I didn't come up with much. My notes are pretty sparse, I have to tell you. So we'll be just kind of going off of the flow of whatever seems to happen tonight. But I named this video that this was, the UAW is holding out, because Stellar's already gave them an offer for 21% gain in earnings. Pretty good, I think, but that wasn't good enough. So you know why? Because Brandon told them he'll get them more. And I fully expect this thing to get pretty ugly. I think what I'll do tonight, since I don't have a lot, I think we're going to look at the three big companies, look at GM, STLA, and Ford. And let's take a look and see how crazy these stocks look like they could get. Maybe we can garner some stuff out of some technicals to draw that reverse fundamental thing I talk to you folks about all the time. I have not looked at them at all, so we'll do this together. One of my favorite things on this channel that I do every night is I don't really, usually I'm very involved in the markets every day, so I don't have to kind of review things ahead of time because I'm a participant. Today, I didn't see much, so we'll see what comes up. I kind of glanced at a few charts before it came on, and most of the stuff that I talked about yesterday sort of kind of happened from the standpoint of the sideways, just really choppy range. And I mentioned that 3-day trade, that outside bar, once again closed higher. There's a nothing trade there. I'm glad I didn't emphasize it, because it really is a very low percentage trade, but it's a very low risk trade most of the time when you do it. But So we're not going to even touch on that. Little bit of movement, but not really in the database. I'll show you. Unfortunately, even getting the late start that we got today, we would need to start about an hour later from right now to get the results of the database. So those of you that have the WaveTech database, you'll see that shortly. I'm trying to work on a project that is going to be able to get that presented somewhere on our website if you're a subscriber or you have the indicators or something like that, even if you don't want to pay for and get WaveTech. I'm working on that. It's kind of coming along. There's like several things. I've told you that we want to do this online symposium. I'm working on that. We have webinars coming up very soon on the indicators. Whole lot of stuff going on. Just really excited about everything that's going on with the with inside of the world here at Kindle Report. So a lot of really cool stuff I think is going to be presented by year end, and so we'll keep working on all those projects. I'm also very close to getting the Substack channel going back up, or that newsletter going, and so I'll be making that out for some of you that subscribe to that. Hopefully here very soon we're going to have some steady content coming out. So enough of that. There's just really from I think somebody even said it really well on the chat tonight. Excuse me one second. Sorry about that. On the chat is that the markets are frozen ahead of the Fed. And that's probably exactly what we should expect, and that's what the charts are doing from that standpoint. So we'll just continue to walk down these this path, which it looks like it's going to be pretty slow. Like I said, we'll take a look at a couple of stocks, maybe even bounce in and do. I guess if we do the big three, maybe we should see what Tesla looks like, and then maybe we'll throw up an Apple just for fun. So maybe we'll do 5 stocks. I will do that. Where am I going to do that? Let's do that when I go through the Russell. So I'll do those stocks then, and then we'll just do the normal flow through the rest of now tomorrow that maybe matters. Maybe we'll generate some market sentiment change or something to happen, as we do have housing starts coming out. I don't expect anything material there. Expected to show 1.43 million on that one. Permits 1.435. So, a lot of folks out there telling you nothing's going on in real estate. There's still 1.4 million new starts. And that's with an M after it, right? So we'll see some more stuff. And we come into Wednesday, we'll get mortgage apps, and of course we get the Fed, and we get all the fun stuff then. So we'll talk about that as we get closer. As far as a live stream on Wednesday, I still don't have an answer for you. I will give that to you tomorrow night. Okay. So let's go ahead. As you know, the database. When I'm looking at database every night, I'm one day lagged. Sunday night is the only time that we have any kind of real time view of the data, and we're always one day behind just because of the time that these streams happen every day. And like I said, working on getting that information, because I think that information is pretty key to understanding the flow of the buys and sells out of WaveTech. Has just been a great, we'll call it almost a leading indicator when it starts to get some traction. Right now, you'll see let's go ahead and take a look at it so I can discuss that. All right, so here we go. We've got 33.40% yesterday. We had for 100, let's see here, 274 buy signals, 357, put us at the 33.40 that you see here. Nothing really material, and as I've been discussing with you, my expectations are that what we'll see here is that the database is likely to stay somewhere between maybe down to 22% would be an extreme, but now I'm more of an expectation of around a 28% to 35%. And somebody was commenting that there's no union at Tesla. That's exactly why I want to. We're going to look at Tesla in comparison. We'll just see what's going on there. So we'll talk about that here in a minute. Yeah, yeah, James, I hear you. We'll talk about that live stream on Wednesday, as soon as I know it's that I'm going to be available. So let's, as far as everything, the rotation goes here, anything to garner from the database, nothing actually, folks. It's really what you'll see here in the technicals is just more sideways choppy patterns. So let's just get into the technicals, because we should be able to flow through and make this fairly short. We'll be just a little bit over from our normal ending time. So let's go ahead and take a look at the S&P. All right, so starting with the hourly chart, as always, we have, it looks like we're starting to top out here just a little bit, and probably I'm looking at a slight downslope here. The algos are suggesting a bottom somewhere. Of course, we're about an hour or two before the London Open tonight. So that's pretty typical that these cycles seem to run that hour before London Open to the hour after. We're probably looking at every night that these are turning points during the night. And it makes sense. London's major financial center. There's also some issues there where the E-mini futures, or S&P futures, are kind of used as a proxy for pre-London trading. So there's that. And then after it gets trading, they're trading on their own. So it's just kind of the reason why we see these cycles like this every night. It's even coming into a low or a high, and then as we come into the U.S. Open tomorrow, it just kind of flows back the other way normally. What we're seeing here from the algos is it looks like some more drifting back down. And I've already set up where I think that the market grid will come into. So let's go ahead and go to the daily chart and just take a look at that real quick here. So it's kind of a mixed bag here as we look at the daily. We've got the moving averages are crisscrossing in a random formation. And whenever you start to see this, folks, you're talking to a guy who's studied moving averages, and not only moving averages, but three of these moving averages that are on this page, the 10, 21, and 40 period moving average simples. I have studied these for decades. Studied meaning every day I look at these, and these are the things that I understand all the formations around them. And I just a quick little, we'll call it educational note here. One of the things that you want to do, I don't care if you use my moving averages or not, but you want to familiarize yourself with some metrics that make sense to you, and that's going to help your trading just substantially when that happens. For me, these were magical numbers, and anybody that's been around, heard any presentations on wave tech understands why, is we were trying to fit Elliott wave patterns with moving averages, and that's why the PPMs were created. And now we have the algos and the auto regression math and other things to do predictive indicators, trying to give us a view into the future. And they're not always right, but the markets change, right? So the dynamics, but generally speaking, they have guided us through this kind of ups and downs, and really we've been in this sideways pattern for a while. And we're still seeing this to kind of continue from the standpoint of, especially going back into pretty much all the way through September so far. just kind of getting up at the upper end of the channel and then reversing out of it. And, that's just been the game. Right now, what we're seeing is PPM1 is trying to turn up a little bit. PPM2 is at a plus 0.12. We need to be at 0.25 to be in an uptrend. So really, if I were going to draw this in, which I will, let's just draw in a pattern here. And what we're seeing here is really just kind of this little zigzag pattern here, going like this, and then we've got a larger channel, and we get a little bit above and below, and that's where we're staying. And the algos are suggesting that we're likely to just stay in this type of channel going forward. Now, this could all change, but the weeklies are confirming this, and as we walk this forward on a daily basis, which I hope you folks that watch this channel are learning a lot, because I'm showing you a methodology of how to think and walk forward every day. Are you going to be right every day? No. Do you have to be right every day? Not necessarily, but what you do want to understand is the general flow of the markets and what they're expected to do from the viewpoint of understanding your work. And in my case, I'm displaying my work every day, saying, this is what it's telling me, and that's what I talk about every day. And we get a few trolls around, and people will always come up, oh, he was wrong yesterday. This guy's never right. It's not, there is no right or wrong, okay? These are general patterns. That's why we have the market grid, and we want to look at what is expected for the next day. I do a lot of intraday trading and some intermediate swing trading, and that's all you need to know if that's the type of things you're doing. So that's the perspective. If you want longer term perspective and looking at portfolios and stuff like that, that's what WaveTech and Portfolio Expert do for our institutional and our retail clients, to be able to manage portfolios versus speculating on indexes or the stuff that we talk about and discuss on the channel here. So just know this general viewpoint I'm trying to give you is why we put out the indicators and all that, so everybody can follow along. And I just love when you guys are commenting about, hey, looks like PPM3 is doing this, or whatever the metric is out of the indicators. I love seeing that stuff. So make sure you post that stuff. I think it'll help everyone. And but that's generally what I'm doing here every day, is just trying to figure out this formation. Now, we're not even going to touch on the weekly, but I'll go ahead, and the rest of this should fly by. Well, like I said, I'm going to do NASDAQ, do the Russell, and then we'll go through some stocks, and then we'll do interest rates, crude oil, gold, and Bitcoin. We'll call it quits. Here we go.
Order filled.
Oops, sorry about that. Sorry, I want to take a partial profit on that trade. Sorry. Meant to turn the sound off. Anyway, so as we look at the NASDAQ, once again, as I've been talking about, NASDAQ is having a little weaker profile as we come in to the next couple of days, where looks like maybe we can trade down toward the 21 period moving average. That's right now at 15,351. We're trading 15,426. That looks like the extreme. And I did forget something, folks. I did forget to go through the market grid on the daily charts on the E-mini, and I have marked down here S2, R2 for tomorrow, 44.77, 45.23. So you got the indicators. Make sure you focus on that. And that was the sound of money. That's a great. So, but the what we're seeing here from the standpoint is just a a drifting lower, and it looks like as we come in to next Monday, kind of a peak value, but it's telling us that the 10-period moving average on the NASDAQ is going to get into trend mode down. So there could be some downside that starts to reveal itself. But right now, even though that's happening, we still have PPM2 is almost at a trend mode. So when you get into another quick lesson here, when you're looking at these moving averages and you have the PPMs and you're looking at PPM2 at 0.21, which is anything over 0.15, usually will support the markets at that value of that moving average, which is the 21-day moving average PPM2. And that value right now is at 15,351. So that should be a fairly good support level. And that maps out fairly good if we look at S1, 15,361. S2 is 15,301. So that'll be probably your extreme value, especially if we're locked in or frozen, as somebody put it on here, from the standpoint of the how the patterns are set up. And then R1 here is 15,467, and we've been at 15,430. So this is why it looks like there's been a little bit of a contraction of the volatility, both on the S&P and the NASDAQ. So kind of look at potential for an S2, R2, but it's 15,527 at the high end, on the low end 15,301. That should be range. I think we just stay there. I'm not sure there's anything coming out. Anything's going to move the markets, but hey, maybe this union situation, we'll talk a little bit about that as when we go through the stocks here just a minute. So let's go ahead on to the Russell. All right, so I'll use the RTY tonight. We'll go with the futures, and they're kind of hammering on the 200-day moving average right now. And it's interesting because all algos on the Russell look a little bit different, but this has been the laggard. This has been the weaker of everything. In fact, if we look just at Monday's action, we saw Russell down 0.69, mainly because all the banks got hammered. We saw the banks across the community banks and even some of the majors, and just looking at the ETFs, they were down between 1.8 and 2.7% today. So a lot of downside, and it makes me wonder if those aren't bets against for the Fed to raise yields. That's why are those bets coming in? Is that going to affect more of these zombie companies? There's a lot of not good companies in the Russell from the standpoint of companies being able to really do well, especially since there's a fair amount of them going to have to refinance their debt. And that may be we'll call it the sector killer or the asset class killer for the Russell, is between the banks and all that crud in there, and financial services are huge component in the Russell 2000, and then you got all these zombie companies in here. There's really nowhere to go. And I've shown you this chart before, but I'm going to flash it up here just real quick. And it's a monthly chart. Look at this thing. This goes back all the way to 2018. Let me just change the scale. This looks like a caterpillar. We've gone nowhere for years on this. We've been drifting lower, and a lot of it has to do, I've shown you before that, like, even our custom indexes in-house on WaveTech and Portfolio Expert, they're showing the financial sector's been out of play for a while. However, it has come into play on some of these stocks. But the whole scenario here, you can see it on the Russell. This is a monthly chart, and this is futures going back. Let me put let's put the actual cash index up here. And you can see once we got into 21, we just drifted down. But even if you go back to 18, we're in the 16 handle. So we're trading up at close to the upper band of where we got in, going all the way back to 2016, that top range. So we're supporting along those values, but this thing has just went nowhere. And I don't have the algos adjusted to be able to do this. But the bottom line is that it's not going anywhere. Okay, so let's go ahead and let's dig into a couple of these stocks. Let's start with GM here, and I'm going to go to a weekly. Yeah, this is pretty interesting. Like I told you, I had not looked at any of these stocks. And what's interesting about it is PPM1 is suggesting that we're going to turn up next week, but there's a ceiling here around $36 on this thing. It's trading right now 33. It's really just set for a slight, maybe moving back into these moving averages. That's what the algos are suggesting. But basically, the only thing I would point to here that is potentially negative is that there's some Fibonacci targets on the downside. Right now, 28, 90, 24, and 21. These are the dots down here. If I bring this up, you'll see these three values. You can see my cursor where it's at right now. That is the first Fibonacci target, but we also had these targets earlier. So this is probably a significant one, around $29 to watch. So nothing really there. If we go to a daily chart just to try to get a feel for any kind of short-term movement, short-term is stable to up. So maybe these guys are going to get a deal, and this whole strike thing is just going to be as bogus as it looked like in the first time. And in the first glance, is that, is this really going to be something? I threw out there, I mentioned Twitter, a tweet that I made over the weekend, and I was talking about what if one of the scenarios, and it's being played out, but you got to talk about it, is that if traction gets going on these wage increases, and we start to see a lot of we'll call pressure on the wages, then everybody's going to compensate. Basically, you probably see all the automakers just raise their prices to compensate for whatever they got. And so that's one of the possibilities for sure. Let's go ahead and let's go to Ford. We'll stay with daily and we'll go up. Ford, it's interesting actually. GM doesn't look too bad. Ford looks like a little downside. Let's go to the weekly because I think we're going to find out more about this. Weeklies are very similar in that we're really looking at sideways, and then it's looking at going all the way out to December, and there's some potential positives out of here. But it doesn't look like what I was not expecting to see or anything, but what if we were looking at these charts right now and there were big downtrends where PPMs were in super negative territory, which they are, by the way. PPM1 is a minus 0.206. So there is monster resistance here on Ford right at the 1254 level. But once again, almost like the Russell, look, this is weekly chart. We have been going back around $11 has been the floor. It's traded down here. We got a little slight upslope here. We actually have upward Fibonacci targets here on Ford, all the way up here. Like Fib target 1 is 1576. Let me get here. 1576, 1736, 1834. So, but the algos are just basically suggesting stable. So we're not getting. Sometimes you look at stuff like this, and you look at the technicals, and you look at what's set up, and it looks disastrous. We're not getting that view, and we're not seeing anything really big either way. So we're really seeing stable, but on this, GM did have some downward fib targets. So let's do Stellars. Let's see here. Atlantis. So this is interesting. They've got upward, there's an upward Fibonacci targets here as well. Looking up at Fib target 1, 22.21, 25.36, 26.69. Last trade here at 18.94. PPMs are really stable to slightly down on the short end. There is a downward fib target on the downside. So basically satisfied going back a few weeks ago. This is a weekly chart. Coming down to this level here, down around the 1680 level. We got down, what's the worst we got down there? 1750 was the range on the downside. So nothing there, no big collapsing patterns, the end of the world, companies going out of business. They're actually, all of them have, looking down the road, have a decent pattern out there. So we'll have to see what happens. So let's do Tesla. No union there. So Tesla also has some upward fib targets up here right now. We've got target for 359, 415, 450. We do have somewhat of a stable environment, but the support levels around 250 or so. I just want to check something here. This is a weekly chart, by the way. Last week, 274 close on a weekly, and so RXT was 268. So that suggests we get 1 to 2 weeks sideways on Tesla. Maybe they're just cars are cars right now, whether you got a union or not. I'm just going to summarize this and say there is no real hypothesis to draw out of looking at these from anything other than stability, slight bias with all of these to the upside after we get through a very short period of the next couple of weeks. So I would suspect if there's anything to read into doing the reverse fundamentals, that these guys work out some kind of deal. They probably get close to 30%, which is ridiculous. And then we'll find out if there's any other contagion, we'll call it, with other folks looking to get an increase in wages. Yeah, kind of interesting. M Stone, could you throw out the if you know the symbols for Honda and Toyota for trading, could you throw those on the timeline? I will actually review those. While we're doing this, I'll do Apple. So if you could, I'll go back to that if somebody will get me those. So let's do Apple. So Apple looks terrible, still negative here, but it's going into, if you folks remember last time I covered Apple, thanks for that. Okay, thanks folks. I'll cover Toyota and Honda here in just a second. But this wedge, this is that formation I've been trying to teach you folks about. When you have a rising, basically we have resistance at the 10 and 21 here, which are currently at the 182 level, 182.12, 182.23. One is declining in trend mode, which is PPM 1. PPM 2 is positive. So you have, it's rolling through this level. So the PPM 2 or the 21 SMA is basically your ceiling. If you look at the this is what, weekly. If you look at last week chart, we got up to 180.30. That number is 181.83. So that was kind of the cap on this thing. And the bottom end of this is this rising 40 pattern. And I'm just going to draw this in because this is so significant. We've seen this. I see this all the time, and I talk about it. So another little teaching moment, just real quick here, but it's this little area right here that I'm talking about, where the market trades into this wedge, and we get that wedge to kick in. So you get this circle will disappear here in just a second, but this is kind of this wedge, but it's formed through these moving averages, and you can tell by what the PPMs are telling you what the probabilities are of those things holding from that standpoint. And so, well, the 40 right now, if I draw an arrow over here, is 0.65 up. So that tells you if you go to the probability map, you only have about a 30% probability that the market would drop below that value. So you should be able to trade off of that on the downside, and on the top side, there's resistance points where that 1021 is crossing. That is likely to be a pretty decent point to look for rejections on this chart. So also even better to set up the straddles for Apple and where you trade at. So you could use the weekly market grid, or you could even go to a monthly market grid and look at that and look at where the straddles are likely to hold. You should be able to collect all that money on some of the shorter term options from that standpoint. So there's a pretty good trade when you see these type of formations. And those of you get the indicators, you have all this stuff there, you're probably looking at something where that's a tradable wedge from that standpoint. They really set up. The problem with trend lines can also give you that same kind of perspective. But from my viewpoint, when you're using moving averages, you've got the PPMs, you've got some probabilities. As a matter of fact, M. Stones, I see him, said had a Rolls Royce back in the 1990s, confirmed. I saw something today, only could happen in Scottsdale, Arizona, a Rolls Royce SUV. We looked it up, it's probably like $480,000. This only happens in Scottsdale, Arizona. I can tell you, not only, but in that area, you just see crazy vehicles on the road there. It was probably Shaq or somebody where I was at. He lives around that area. So it's just kind of funny, some of the crazy money that's down around this area down there. But just it triggered me when you mentioned the Rolls Royce of Queen Elizabeth. But anyway, these wedges are something to watch. Let's do Honda. I'll keep going on this, so maybe so much for getting done early. But let's do Toyota first, and then we'll do Honda. Wow, look at nice run there, right? This is weekly. It does show this is interesting. So I'm glad that somebody said something here on the timeline, because what's happening? Look at this. We got an RTX sell this is weekly. I just want to double check. Yes, we got a weekly sell, so we should get some sideways. But look at this upward bias here on this. We are seeing that the PPMs are going to fade, but even if we look out into October, even though that momentum is dropping off, PPMs are going down, it does not necessarily mean that the market will go down, but it does suggest that we could come back and test that moving average. And you have to understand that the 10-period moving average is rising in this pattern, and that's at 172 right now. It's going up roughly about, we'll call it $3 a week. That's kind of rounded off. But we're seeing that slope, and we're probably going to climb along that slope. We probably get sideways. Maybe the market goes sideways into this 10-week moving average. But it's interesting that the autos still look good here overall, and everything looks like, yeah, there's probably still pricing power. I see somebody talking about the inflation. And I mentioned, I think on this Twitter space this morning, that, the stock market's one of the best inflation hedges out there. I mean, maybe look at what's happened since the Fed really started to raise rates. Even though this flow of inflation has come in, everybody's got the pricing power, And now the not the earnings, but the wage pressure that's trying to come in right now has hit several things. I had to send something FedEx a couple of weeks ago, and it was my jaw dropped when I saw how much it was to send something overnight now. I remember when it was like $14 if you had an account. Not anymore. It's like $65 or something. It's ridiculous. So, all right. So let's do Honda, and then we're out of here. Interesting. It's even stronger. So when all this talk came out, look at this, the last 5 weeks here, just explosion. And we have some Fibonacci targets above here. And we're looking at Fib target 1 right now is 36.53, 39.16, 40.78. We probably top out right around this Fib target 1 at 36.50. Should come in sideways. These lines that are being projected on these are predictive SMAs projecting this out. And if you get the indicators, you can put any moving average value you want to for the predictive values. Now, I made it easy. I have one for each of the ones that I show you every night, which I use. I don't deviate from them, but you may want to. So that's available for you. But this is showing very interesting. So we have autos in general up. Looks like this little strike thing gets behind us. Maybe no one cares, and there won't be any contagion. And there's, you have to be careful. It's very easy in this kind of environment to want to create this negative, the end of the world coming. There was a guy, I got to call him out, this George Noble guy, really cocky guy. Last year started a short fund, already blew up. He made Kathy Wood look good, actually. And this guy was just a jerk. I hate to call somebody out like that by name. I shouldn't have done that, but it happened. But the reason why I bring that up is it's really easy to fall into that trap. And I've noticed if I put up a negative thumbnail on my channel, I will get thousands more views if it's negative versus a positive. And it's just the, it's the, what do you want to call it? The doom porn will attract just a lot of folks. And that's, so anyway, but yeah, so very interesting, folks. Thanks for putting this out there. Like I said, maybe I'll let you know tomorrow night on what we can do from this standpoint of the Wednesday stream. So yeah, that's pretty interesting on the PE ratios that M Stone's putting out there. Toyota 12.51, 12.51 to 1, and yeah, very interesting. Yeah, I'm sorry to do that. I try not to do stuff like that. I got to tell you, I got a ticket driving down to the valley today, and it was an absolute joke. The funny thing is, the situation is the cop actually caused the whole thing, and I called him out on it after he wrote my ticket. So anyway, funny story. Anyway, so let's go on and let's. So we have right now left. We've got interest rates, crude oil, gold, and Bitcoin. So let's figure it out. All right, so we'll take a look at the 10-year here. Not a lot going on. I've got the weekly up. Weekly continues to show some stability. We should be able to hold this 10-period moving average line. And we're at 4.15 is that support line. I mentioned the other night, and I always mention these, but I think it's an island, what I call an island projection. And I've got my cursor here. I'm just going to draw this in because a lot of you have these indicators, and I try to throw in little bits and pieces of I guess we'll call it training or education on some of this stuff. But let me just draw this in real quick here. And these little guys right here, these dots, will get these islands where you get these projections to the downside. And what you don't have is the confirmation. So you got, in this case, we have a little bit of downslope here in the PPMs to sideways. Probabilities of getting through this 21 period moving average, it's at 1.06. It's right now less than a 10% probability for the market to drop below the 21 period moving average, which is 3.9%. They're not going to happen there anyway. I think the 415 is where we hold, and I think once we get through this week, and I believe the Fed raises rates, then the pattern that we're likely to see set up here is just kind of a rolling as we come into year-end, stable to flat, and maybe at some stage after this meeting, depending on what happens, we can kind of go into a little bit of the yield curve expectation and those type of things. So let's take a quick look. I don't think there's anything here, but let's go ahead and look at the 10-year here. So interesting action. We got big reversal. It spiked up. This is the weekly. Let's go back to the daily, and you'll see. I think that was an overnight spike. Yeah, no, that was yesterday. So we got all the way up to 5.49, the low 503, and then 505 is where we ended up. So interesting spike. But once again, I'm going to blow this chart up a little bit. When we look at the scale, everything is flat here on all these interest rates. So stable looks like where we're likely to go and all that. And I'll tell you what, I will do DXY tomorrow night, and we'll do the Dow right before the Fed meeting. So we'll do that tomorrow night. Okay, so we'll cover that then. Okay, on to crude oil. So this is an interesting chart because it seemed, I remember we started, let me go to the weekly here real quick. There were some targets that came out over here, and the fib targets indicators were showing us, let me get these values up here so you can see them. But over here, we were projecting 82, 90, 13, and 94.66 would come back into reality, and we got to 91.23. So we're basically hitting that old fib target, but that pattern, even though it got invalidated, it's still coming up into that range. And look at this, folks. If this slope continues, then we're going to see all the way into year end, we're going to see crude oil prices just climb. And I've showed you this before, that looks like that's some kind of peak value. We'll see what sets up by the time we get there, because this is looking out a little far from this standpoint of the predictability of these indicators and the logic. But I think if you watch some of the videos, what's really interesting, if you have a premium TradingView account with real-time quotes, you put that 5-second ES chart up there, it is absolutely insane. If I do a live on Wednesday, then I will put that chart up when the Fed is out. We'll see if we get some predictive kind of stuff that looks really interesting. Yeah. So, yeah, there's a number of things out there, and I I won't tell you a story tonight, but I do have a very famous and infamous story back from 1990 when the Gulf War started. But this is somewhat interesting in that we just have higher projections. We've got this upward slope. Looks like it should continue. And I don't know, I thought it was ridiculous. I didn't think we'd get above 90. We did. And this upward projection suggests around 95. Let's go full Monte here, and let's bring up the monthly. This may be very revealing. Yeah, so we're almost at the monthly targets, but this is actually pretty revealing. As we come into March, there is still a major acceleration of this pattern on the upside. In fact, projecting this, this is kind of interesting. We'll have to watch this. And now, as we get in, we're at the middle of September right now. So when we come in the 1st of October and we set up the Q4, when I do my long-term analysis, we're going to set up the Q4 analysis. But look at this upward slope here in the on the 10-month moving average, suggesting all the way up into February 25 on a long-term basis, and 85, 80 is going to be the low-end range. We're trading 91, so there's potentially an awful lot here. Can we punch out and go after the all-time high? That's certainly a possibility. But right now, I'm just telling you, there's still upward slope here coming all the way through 24, and that's just going to that's not going to be good if you're the incumbent president coming into the election. Very interesting view there. Had to stay with the monthly chart, see if there was anything that was going to make Peter Schiff happy at all. And monthly gold, we do have a pretty decent upward slope here. We got PPM 1 at a 1.01, so that's pretty solid support levels right where we're at right now, 1940. We're trading, let's see, we finished at 55. We're trading 55 right now. 1940 is it. And as I've talked about on the, I'll go over to the weekly chart here. Around 1900 is pretty solid there. Let me just blow up this. Yeah, here's that wedge I was talking about and teaching a little bit ago. Hang on here. Let me get to the right place here. This goes back for a while. If you remember, here's the gold in that similar wedge. I'm trying to get scale so you can see it here. Let me draw this in, because this, I keep trying to make this point, because if you watch this stuff, that just, especially if you're an option trader, you can really set up some amazing patterns here to allow this to go. But this was the wedge pattern, that wedge. I'll try to draw it in as fast as I can here. But this was downward slope wedge here, and that's how I said the gold is going to stay in that wedge. Now this is a weekly chart, but this is exactly where we traded. We traded a little bit above it and a little bit below it, but those were your sell the rips and buy the dips over here, and we're still trading within this pattern. And that upward target from this standpoint is actually at the, I'm just trying to get the value out here. Looks like 1960. I mentioned that number a lot here. Now, this is interesting because we've got weekly and upward projections. To me, it looks like we stay within the market grid on the weekly. And it's interesting that monthly looks higher. Maybe there's some kind of coefficient or correlation, I should say, with the gold and the crude oil as well. And, I don't think... I don't think there's a lot that we're going to be able to garner much more than looking at these patterns until there's more information out on the street. All right, we're finally there. Bitcoin, final market. I'll come back and just discuss some of the things that came up out of today's meeting. So here we go with Bitcoin. Is mentioned this in yesterday's broadcast. So Bitcoin staying right above that 40. I'm trying to blow this up, folks, for you, because that wedge, I was talking about the downward slope 21, the upward slope 40. That's going to be your outer bounds. And if you look at the prices here, I just put the cursor on that spike up. We got almost to the 21. That was 28,297. The high was 28,142. Rejected even on that bar. This is a weekly bar. The low of that bar, the 21 period, was 25,322. The low was 25,333. So spot on. And then just we come back more into recent activity. Last week we spiked down when the market got hit. There was a little spike down, but it reversed and got right back into that pattern there from that standpoint. So basically, that's that pattern, downward sloping moving average, and you get wedged in there, and those are your trading points. I mean, that for intermediate short-term traders, that little tip right there will make you a lot of money, especially using when you have the PPMs and you know the probabilities of those levels holding. Because at the time, PPM 3, by the way, is still up almost at 0.97, almost up 1%. So that thing is absolutely rock solid from a standpoint in the market's not being able to stay really below that level for long. Okay, folks, that's going to do it for today. Thanks for being patient and getting things together. A couple things I see here. That was people talking about oil embargo. Hey, listen, anything's possible. Russia still has a lot of power that people like to ignore with their activity. And anyway, I won't go very deep on that, but, you know, I've spent some time in Dubai, and I would tell you that there's the oil players, we'll just say the UAE and all those guys are hanging out together, folks. The Russians, UAE, China's hanging around there. We all know about the BRICS and the efforts there, and some of the meetings that even the India and Brazil, the whole deal in Africa. And I think the Africa situation is kind of interesting. I would be incredibly worried if I was in Africa and the areas where there are resources, because I think these guys are about to be manipulated, and they're weak enough, meaning that they don't have real robust economies that they could be taken advantage of. I mean, if you recall, I think it was week before last, the Saudis announced a deal with the U.S. to do some kind of mining investment in Africa somewhere. And I just kind of went, uh-oh, these guys are coming in. You get these big players coming in. That's never good if you're a little guy, right? So anyway, folks, thanks again. I'll be on time tomorrow. No plans to be out of town. And I'll let you know tomorrow night whether we're going to do a live stream on Wednesday. And it's fun to and Zoltan, I 100% on that. So anyway, I'm just looking at some comments here just to kind of go. But I think there is something going on just in final with all of the stuff I just mentioned. Oil is big time in play. We're supposedly, I'm doing air quotes here, beyond the U.S. Driving season. I mean, kids are back in school. It's working on getting into October already. So, there's still an awful lot of demand for oil and all that stuff. And there's stuff going on, folks. And that's another reason why I believe the Fed will ultimately raise rates. There's just no way for them to back off yet. And if they back off, then they're going to have a hard. This is my final note here on the Fed, and we'll talk about this tomorrow night. And like I said, I'll let you know if I'm going to be live on Wednesday during or if after the Fed meeting. But they got to keep it up, folks. They can't let it down because just the things that we're seeing and what we talked about tonight, and all, it seems obvious to me, but maybe we'll find out differently. But it looks to me that there's just an awful lot of inflationary pressures that are still flowing around, and they're not going away very easily. So anyway, that's it, folks. Thanks again. How'd we do? A whole hour after all that. So it always works out that way. And I mean, I feel really good about this, Chris. Bob, you're the only person that thinks the Fed will raise Wednesday. I really am. I can tell you, I was on a Twitter space this morning, and there were like 5,000 people on this space, and I just, So, but this is my point here, that final point. It doesn't matter if they do or they don't. There's, if they don't, what does that mean? So those of you that think they're not going to do anything. What does that mean? Now, is that bullish? They're done? They're not done. I'm telling you, it's not done. And these forces are not going anywhere. The interest rate forecasts are showing you higher and higher yields. Nothing even on the short end. I should bring up like the 13-week T-bill, some of this other stuff. Nothing showing you that this stuff is going to start to go down. And my argument is not only are they going to raise this time, there's probably more than you'd like to believe forward. Maybe there's more. Maybe then they skip a meeting, but it's not going away anytime soon. And when they do finish, they're not going to drop and they're not going to lower rates for a very long time. And if the economy does start to fail, then they're going to watch it for a while. They're not going to panic, I don't think. I think they'll let the thing roll over, but I don't see that at the moment either. So anyway, folks, just kind of babbling at this point, but thanks for watching and being part of this channel. Hit the like button, subscribe, do all that stuff. We're once again stuck at like some 33,800 number. Remember 32.8? Now, yesterday was 33,8888. There's something's going on with the channel. They're throttling me. That's okay. Just keep watching, telling your friends, and we shall move forward. Thanks again for watching. Yeah, Carl, I don't know. I wasn't here today. I'll find out why the 2-year spiked. That was pretty strange. Hey, Bo, it looks like you're the last of the Mohicans on the Smurfs. We got to hire some new ones.